Today, Capital Markets 201, the introduction. Hello again, I'm Martin North from Digital Finance Analytics. Welcome to the first in a new series of videos in which we discuss the capital markets. It's important to understand how these markets work because they are such a large element in the financial system, with bonds and other funding instruments and the mix of derivatives together dominating the markets and, by the way, the risks in the system too. As you will know from our earlier posts, the total value of derivatives in the system globally dwarfs the value of the real economy. You might like to know that I spent a number of years working in a major bank where I taught capital markets to their senior executives because they had been subject to a major financial crash during which it became clear that senior executives in the company had no idea about the markets, how they worked, and the inherent risks that they were taking. Some would say little has changed. In this introduction, I will discuss what we are going to explore in the series over the weeks ahead. I'm not assuming any prior knowledge of the topic in these shows, so we will start out quite simply, but by the end of the series, we'll be touching on some quite complex yet interesting concepts. So do come along for the ride. And I should explain that I called the series Capital Markets 201 because this is going to be much more, so much more, than a simple 101 overview. So today, to start, I'm going to outline the structure of the series and offer a definition of capital markets. The capital markets are simply a marketplace where buyers and sellers engage in the trade of financial securities like bonds, stocks, and other instruments. This buying and selling may be undertaken by participants as diverse as banks, other financial institutions, companies, government entities, and even individuals. The market may exist within a country or internationally, with the bulk of transactions relating to Australia, for example, being offshore. These markets help to channel surplus funds from savers to institutions which then invest them, and many of these trades are in longer-term securities, though, as we will see later, short-term funding and also a complex set of derivatives are also important in the sector. Finally, capital markets consist of primary markets and secondary markets. Primary markets deal with trades of new issues of stocks and bonds and other securities, whereas secondary markets deal with the exchange of existing or previously issued securities. Another division in the capital markets is made up on the basis of the nature of the security traded, for example, stock markets and bond markets. And finally, as well as trading in the underlying securities, there are many flavors of derivatives. A derivative is a contract between two parties which derives its value and price from an underlying asset. The most common type of derivatives are futures, options, forwards, and swaps. And generally, stocks, bonds, currency, commodities, and interest rates form the underlying assets. So, to the structure of our series of programs. We're going to start in the next video with the concept of the time value of money. It's essential to understand that capital markets are all about manipulating cash flows. So we need to know about how to assess cash flows and develop some basic language to describe them. We will also touch on concepts such as compound interest, current and future value, and internal rates of return. Next, we will look at the treasury operations in banks and other large corporations and discuss the concept of disintermediation, where companies behave like banks in their own right. And we'll also meet our archetypal Belgian dentist and where they put their money. After that, we will start looking at the individual instruments that make up the capital markets armory. So we'll look at bonds and other funding instruments and how they work and the different flavors which are out there. These instruments are the bedrock of the capital markets, so we will look at who might buy and sell such instruments. Once we understand how bonds work, we can then start to explore the more complex derivative areas of the capital markets. We will look at futures and options contracts and how they work. This is a big area, And we will also look at both contracts relating to physical commodities like corn and pork bellies, as well as those relating to financial contracts. And then we're going to take a deep dive into interest rate and currency swaps and options, an area which I find really interesting. And there are a number of other variants which we'll also touch on. Then towards the end of the series, we will start looking at financial engineering, where these various products are put to work. And I'll look at, for example, securitization. I was involved, by the way, in some of the early transactions in the 1990s. And as we bring the series to a close, we'll look at the risks in the system, the way the markets are regulated or not, and some of the gaps in reporting and disclosure. So buckle up and enjoy the ride. And by the way, I'll run a couple of live Q&A events as we progress through the series, and I'll also try to answer questions as we go through, so do post any that you have. Watch out for the next episode, The Time Value of Money, which will be coming soon. And by the way, if you value the content we produce, please do consider joining our Patreon program, where you can support our ability to continue to make great content. Here's the link, and it's in the comments below. And as always, if you like what you've seen here today, please share and like the post and add a comment or question. I read them all. And if you want to join the growing band of subscribers who receive alerts when we release new posts, do subscribe now by hitting that subscribe bell. And if you've already subscribed, many thanks. I really appreciate your support and participation. I'm Martin North, the Principal Analyst at Digital Finance Analytics. Many thanks for watching, and I'll talk to you again next time.